So in the traditional stock market and trading parlance, you might hear about averaging down and that being a viable strategy over time. I'm actually very skeptical about ever averaging down in a stock, and today I'm going to tell you why. Hey everyone, lead trainer with StocksToTrade, Tim Bohen here. Be sure to subscribe and ring that bell to be notified as soon as a new video hits. We do a lot with these videos. Really proud of what we do on this YouTube channel, whether it be tips and tricks like today, whether it be long-term webinars like we do every Monday night on YouTube Live, or if it's breaking down fundamentals or breaking down technicals. Offer a lot of great information here, and I would love for you to be notified immediately, so be sure to ring that bell. So today we're going to talk about averaging down, and if you took a high school class or possibly a college class, or maybe you've read some of what I call the old school methodology, they may talk about averaging down. You know, the idea is you're buying at a discount, you're lowering your cost basis. So let me start out by explaining what averaging down is, then I'll explain why I don't think you should do it, and then why I don't think it's ever a viable strategy. So when you're averaging down, the idea is you bought a stock at, say, $10, and the stock has now dropped to $8, okay? If you buy 100 shares at 10 and you buy 100 at 8, your average cost basis is now $9. So you've lowered your cost basis, which that way the idea is you bought at 10 because you believed in the stock, you bought more at 8, you brought your cost basis down so that if and when the stock trends back, you're in the green. You know, in this scenario, you're now green when the stock hits 901, okay? Whereas in the past, if you hadn't averaged down, the stock would have had to get back to $10 or 1001 for you to be quote unquote in the green. Sounds great and in my opinion, it only sounds great. I don't think it plays out over time because especially in these lower price stocks, these volatile stocks that we love to trade, so many of them just never come back, okay? We're talking about momentum stocks. We're talking about $1 stocks, $2, $10 stocks. We're not talking about Apple. We're not talking about Amazon, okay? I'm guessing you're on this channel. You want to learn how to trade. You've probably got a small account. You can't trade a $1,900 stock like Amazon. You can't buy one share, much less 10 or 100 or 1,000 shares of Amazon to make real money. So averaging down in Amazon or Apple or Microsoft is one thing. If you're averaging down in a momentum stock, a big runner, you're just setting yourself up for disaster, really, because so many of these stocks spike, fail, and never come back. So that's why I think it's just something to never, ever try to do. And most of what happens to traders is, you know, they refuse to admit they're wrong. They can't accept the loss. They become a bag holder. There's nothing worse than being a bag holder. What you're doing there is you've decided, I'm not going to take this loss. I can't be okay with being wrong. I'm going to add lower, and I'm going to hope and pray that this stock spikes back someday. That is loser mentality. That is why 90% of day traders fail. You want to have a winner mentality. You want to be adding to winners, not adding to losers, okay? It's counterintuitive, I get it. But if you're in a big run in stock with news in a hot sector and it's gone from 1 to 2, you bought at 2, now it's at 3, add higher. Yes, you're raising your cost basis, but you're adding to a winner. That's what successful traders do over time. Adding to a loser in low price stocks is never viable over time. You might get lucky here and there. You'll add, and then the company gets bought out and you think it's going to work again. You got lucky once. That's not how you become consistently profitable. That's not how you succeed over time. So, in summary, let me know below. Have you added to a loser and have you made it work? Because I'd be curious to see the comments. You know, if you want, post under an anonymous account because I would like to know if you've ever added to a loser and made it work. I'm guessing a significant majority of the comments are gonna say no. In summary, have that winner mindset, not the loser mindset. Add to winners, never losers. cut those losers, let your winners run. That's how you become consistently profitable over time. Thanks for watching our video. Be sure to comment below with any trading related question. We love answering your questions. Also, like and share with your friends, and be sure to subscribe to be notified as soon as our next video hits. And if you're looking to expand your trading knowledge, don't forget to check out all of our other videos, and be sure to click the trial below. Check out StocksToTrade. I think it is one of the best, most rapidly advancing softwares out there. Be sure to check out our trial.